Welcome to Tesla Deep Dives.
The topic today, the strategic pivot. Why Tesla is trading the legacy of the Model S and X for the future of Optimus Robotics.
Good evening. For over a decade, the Model S and X represented the pinnacle of Tesla's engineering, establishing the premium EV market. Yet, that era is officially ending. Tesla has announced the discontinuation of the Model S and Model X, two founding models, marking a profound strategic pivot. This isn't just a simple model retirement. It's Tesla trading its automotive legacy for what Elon Musk calls the largest product opportunity in history, the Optimus humanoid robot. This shift signals a hard pivot from a car company valued on units delivered to an AI and robotics company valued on the exponential curve of general-purpose intelligence.
The numbers paint a clear picture of why this sacrifice is strategic, not sentimental. In Q4 2025, deliveries of the high-end vehicle segment, S, X, and Cybertruck combined, plummeted more than 50% year over year. The iconic Model S and X now represent less than 5% of Tesla's total vehicle sales, becoming a drag on manufacturing complexity and capital expenditure. As one analyst at UBS put it, the planned end of Model S and Model X production is the cherry on top for the EV to AI transition, signifying the final divorce from legacy revenue.
The concrete action behind the pivot is the retooling of the Fremont factory. Musk confirmed that the Model S and X production lines will be converted into Optimus manufacturing space. This decision directly supports the aggressive long-term goal of producing up to 1 million Optimus units annually. The move is a tangible commitment of valuable floor space and capital, a sign that the company is allocating resources based on future potential rather than past performance.
Optimus remains highly speculative, but technically ambitious. Recent demonstrations highlighted the Gen 3 prototype, which features sophisticated hands with 22 degrees of freedom, opening the door for complex manipulation tasks like precise fine motor control. While Musk has consistently set high targets, such as claiming the company had 2 Optimus bots performing tasks in the factory autonomously in June 2024, he recently admitted that no Optimus robots are currently doing useful work in Tesla's factories, clarifying that the program is still in the R&D phase.
The massive financial bet hinges on scale and cost. Tesla projects a potential long-term price for Optimus in the $20,000 to $30,000 range, significantly undercutting traditional industrial robotic solutions. Musk has set an audacious near-term target to ramp to 50,000 Optimus units in 2026. Ultimately, the CEO has declared that humanoid robots could constitute up to 80% of Tesla's future valuation, framing it as the key to a sustainable abundance economy. Despite a challenging year for the core automotive business, with Tesla reporting its first annual revenue decline, the stock reacted positively to the pivot news, rising approximately 2.5% in after-hours trading. The market's reaction confirms that investors are overwhelmingly pricing the company on its AI option value. Financial firms are adjusting their models. Morningstar, for example, recently raised its fair value estimate for Tesla from $300 to $400 per share, specifically citing a higher valuation of the humanoid robot business as a primary driver. Bank of America further solidified this perspective by assigning roughly 19% of Tesla's equity value to robotics.
However, the pivot is fraught with risk, which dominates the skeptical narrative. The current reality is that scaling robot production is a manufacturing challenge that Musk himself acknowledged will be agonizingly slow initially. Critics point to Musk's history of missed deadlines for FSD and vehicle production as a red flag, arguing that the AI valuation is based on corporate puffery rather than demonstrable near-term revenue. This execution risk is the central tension, with skeptics warning that delayed milestones could trigger a rapid re-rating event.
In synthesis, the strategic pivot is unequivocally bullish for Tesla's long-term valuation, even as it creates significant near-term volatility. The market sentiment, as evidenced by the stock's favorable reaction to poor EV results, clearly backs the AI robotics narrative. The company is successfully forcing the issue. It is no longer an EV company, but an AI company with a vehicle division. The prediction is a sustained growth-at-any-cost strategy centered on autonomy, requiring massive capital expenditure, projected to exceed $20 billion this year, primarily for AI compute and the Optimus factory.
Investors must monitor specific, verifiable metrics to validate the AI thesis. Crucial indicators will be the ramp of the in-house AI5 chip, which Musk is personally focused on, promising a 50x performance leap, and most importantly, the number of Optimus units deployed internally, performing genuinely autonomous, useful tasks, not just choreographed demos. The first signs of this transformation will be gauged by a ramp-up to the 2026 target of 50,000 units. Should Tesla achieve demonstrated full autonomy and scale the internal deployment by 2027, the long-term multi-trillion-dollar bull case will be significantly de-risked.
Let me know what your thoughts and leave your comments. Thank you for joining us for this deep dive. To ensure you never miss a pivotal analysis, please like the video, subscribe to the Tesla Deep Dives channel, and hit the notification bell. Your engagement fuels our critical research.